Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. It is August 24th, 2021. We have 1 week to go officially, right? Because there is you guys know that song, the 31 days and yada, 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 yada. I only know that August has 31 because my birthday is the 30th. So less than 7 days for my birthday and less of 7 days before we hit September. And yeah, school, everything is going to come with that. So actually, I have an orientation with the boys today, middle school, and I'm excited. I can't wait for them to go back to school. I love them, but I'm ready for them to go back. I'm sure many parents out there, anybody that has kids, feels the same way that I do. With that said, let's just dive into things today because, today is not a very big news day. We know that we have Jackson Hole, which is an absolutely large kind of, has, international, global implications. So we'll see what we can do today and figure out where to kind of look for opportunity for the rest of the week. For those of you that don't know me, most of you do at this point. Every week we seem like we get a couple new bodies every week that are coming back again. But I run a company called Keep Trading Simple, and my charting style is slightly different, right? If you guys ever watched or heard any of our presentations, you guys know that I am not using MACDs and RSIs and Ichimoku clouds and there's all kinds of crazy tools out there. I don't use a lot of those tools. I don't feel that they're needed. I feel like they're a crutch. So I really kind of just dive right back into the basics of supply and demand and focusing on price action. So if you have any questions, I'll give you guys my email address at the end. You're more than welcome to email me and ask for clarification of anything I talked about. I've created a number of different courses that you could use specifically with Nadex as well as external ones as well. I really, I'm a big believer in that. You need to, be a master of one, but have many trading assets and tools out there that you can use. The way the markets work, they're not always a given asset class is not always the best. I feel that Nadex is definitely something. It's one of those arrows in your quiver that you guys should have. So you hear me sometimes talk about the spot market or the futures market or the indices or even traditional options. At the end of the day, pretty much everything that I'm going to cover today, we can trade inside of the Nadex market minus New Zealand. But again, there is implications to other currencies and other nations that we are trading inside of the Nadex realm. It's funny. This is probably, I'm going to have to update this picture rather soon. Melissa actually went into labor last weekend and they were able to halt it. We're still a little bit early. The new one is not due till October. The two boys, actually the boy on the right in that picture, the one in my left hand, right? He is actually only an inch shorter. We just measured than Melissa is right now. So they've grown up quite a bit. And the little girl in that picture has hair down to her butt now. So I need to update my pictures, I guess. But I guess I'll wait till the new boy is coming. So with that said, let's dive into the actual trading today of what we're finding. Before I do cover a chart, though, I do need to cover a Nadex risk disclaimer. That trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost of their cost at the end of the transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and none of the material included herein is to be construed as a solicitation, a recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Like I said, if I'm looking at an indice chart, yeah, you could definitely trade it in the futures market, but that's not what this is about today. It's about educating you on how to look at and read charts. Now, Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. All right, so with that big mouthful out, I'm getting better. I have to take like 2 breaths now, right, when I do it. I'm gonna get some of my the nectar of the gods. I guess I don't know. I guess everybody's different, but for me, it's coffee. I know I have a close friend that he when I say nectar of the gods, he automatically goes bone marrow. I'm like, no, not bone marrow. he's a big cook and he loves that stuff. But for me, it is coffee. I don't know if anybody out there is a coffee fan like me. I drink it black, go right for the the caffeine. I would say I love the intravenous drip of coffee, but I don't do needles. So for me, I'm just drinking it straight out of the cup. So what we're going to cover today is first things first. We always dive into the news events for the week. I mentioned Jackson Hole this week, which is Thursday, Friday, and Saturday. There's already, you're already starting to hear some rumbling headlines from it. But we'll cover the other economic news releases. Reason why is because they provide a lot of movement. It's a big catalyst for the market. On a fundamental basis, I don't believe it really changes the direction whatsoever. But at the end of the day, it does provide movement within a specific period of time that everybody knows about. So it's just the fact that it narrows down when the market's going to move and provides a little bit more of kind of a kickstart, a little jump start, right? Little lighter fluid on the fire there. It's something that you need to be aware of, okay? Then what we'll do is we'll dive over and look in the indices. Now, they're up a little bit today, nothing spectacular. Like I said, I think at this point, everybody's kind of like starting to get into that wait and see. We had great movement yesterday, and I mentioned that during our Nadex session in the morning. Wouldn't be surprised if we have a day or two where we just don't move a lot, again, in preparation for what could potentially come. The one headline that I did see earlier that I thought was interesting, that one of the talking points at Jackson Hole is going to be talking about the uneven economy. And I think that is very, very interesting and could have some lasting kind of impressions. We've mentioned this word uneven a lot. It's something that does come up. And in regards to everything. And right now, the biggest global factor straining the world right now is obviously COVID. And obviously, there's been an unequal distribution of vaccines as well. So I think a lot of the things that could potentially, headlines that could be coming out of Jackson Hole are going to move the market all over the place. But I thought that word, talking about the uneven economy, I thought was very, very interesting. And again, we'll kind of see where the indices are going for the rest of the week, or potential areas where they can move. Like I said, I don't have a crystal ball. I don't have like my coffee cup and then one of those snow globes that tells me the future next to it. I would love it if I did, but at the end of the day, I don't. I can just tell you, where I think that there's a potential reversal is going to be, and then we'll cover Forex. Forex has had a lot of movement in the last 2 days, and it's very cool because this is one of those things. Some people know it, but not everybody knows it. That inside of the currency market, there are actually associations with other things like commodities. Okay, one of those being oil. The dollar CAD is pretty much linked with oil, and it's basically it's moving a ton in the last 2 days, predominantly all because of the news and the movement that we've seen in oil. So again, markets overlap. That's why I said you need to have multiple tools, multiple arrows in your quiver to make sure that you're using, what's best. Now, last but not least, commodities. Obviously, I just mentioned oil, but let's talk about gold and oil as well as natural gas. Natural gas has been one that's been quite volatile and moving pretty much all summer. It can be traded, and again, I'm not trading it every day. I'm looking at it. I'm doing some analysis for my students on it. But it's one of those things that if it gives you another potential trading setup, even if you're doing nothing else but trading the oil, the natural gas inventory report on Thursdays, that's a time when there's going to be volatility in a market with movement, and Nadex offers contracts in it. The same strategy that we use to trade oil on Wednesdays, you can also use to trade on Thursdays. So I will look at that one as well and see where we're close. It is obviously being a Tuesday. We got 2 days to go before that inventory. So can't really give you a trade setup right now, unfortunately, but we can talk about different areas as well as just educating you about charting analysis. With that said, let me see. I hit a button and there was a question there, but I lost it when I hit the button, so I'm not sure where it is. Anyway, let's go across and let's pull up the first of the charts. So actually, we're going to start here first. Let's talk about kind of the movement that we've seen. Now, the currencies have really leveled out since the U.S. Open, which is something that's very, very common. But you can see that the dollar CAD has actually had the most movement, and really in the last hour, it's doing a big retrace, but it's still down 49 pips in 24 hours. So besides that, we're seeing, earlier today we were seeing nothing but really dollar weakness. You're still kind of seeing it right now, but like the dollar CAD is not so much dollar weakness as it is really CAD strength, right? Because of oil prices. Aussie dollar, again, that also has to do a little bit with gold, right? But everything else is kind of flat. Pound is down a little bit, right? Except versus the euro, and then the euro is down a little bit. So, again, there's not really anything that really stands out right now, minus, the Canadian dollar. And the reason why is because of oil right now. Okay. The news today, you can see this is all the news for all of August 24th. You can see there's not even one orange news release in there. It's literally all yellows. And it's kind of like, what are we taking from this? I mean, the Richmond Manufacturing Index being way down, it's not the best, but home sales being up, hey, that's good, right? The rest of today, we really don't have anything, right? So it's quite a I don't know, I've used this term in the past, anemic, but again, I'll do the same thing here, and let me get rid of the yellow because yellows aren't really big movers. You can see even on tomorrow, it kind of dies out. We have durable good orders, which are going to be nice. They're expected to be, holding at 0.5% on an increase on a month-to-month basis, which is good, right? It's people spending money. And then we have our crude oil inventory. Now, the forecast is supposed to be minus 1.9 million barrels. Last time it came in as minus 3.2 million. Now, don't forget, later on today after the close of business, we have the API inventory report. Okay, that is an industry provided report. So again, the same people that are profiting from the price of oil, those are the ones giving that report. So, take that one with a grain of salt. Followed up by tomorrow or Wednesday morning, which is the EIA number, right? And that is the 1030 oil inventory report. That's what's going to make this move. So tonight we kind of get like a foreshadow into it. But again, that's something that if you guys want to figure out where we can trade that one tomorrow, dial into Nadex, the Nadex YouTube page. We go live at 8:45 tomorrow morning. Now, Thursday, we start off with preliminary GDP, quarter over quarter. Now, this changed. This was forecast to be 6.6%. They've actually raised the forecast on a quarterly basis now to, they think it's going to be 6.7. They can make it 8 all they want. It doesn't necessarily matter. But what I think's happening, or where I like this is, the higher that they go with this forecast, the more opportunity that there could be for a miss to the downside and still be positive, right? Right? It could still be positive. But again, if there's a miss, again, that tends to be not as positive for really everything we have going on with tapering, interest rate changes, everything. Unemployment claims. At this point, I think we're kind of out of the realm. We're not, doing mass layoffs and everything. I don't think we've quite gotten to that stage, nor do I think we will return to that stage. So, it's becoming something, but, behind a GDP number, and then again, Jackson Hole for day one. I just don't think unemployment is going to be a big thing, followed by retail sales at night. Now, I do actually really like this retail sales number month over month. Australia hasn't had the easiest of roads. Okay. I mentioned earlier that I was going to mention New Zealand. We saw a lot of news out of New Zealand. They were supposed to raise and they didn't do it, but they said that, the reason they postponed raising it was because of communication difficulties rather than risks. Now they're talking about raising it 50 basis points, which is absolutely huge. They've shown that demand has been proven to be more resilient than anticipated. We've learned lockdowns only delay spending. People are going to still spend the money, and that policy decisions won't be tightly linked to COVID. So New Zealand, while we're not trading that over at Nadex, them kind of decoupling themselves from COVID, saying, listen, it's here, but people are going to spend the money whether it's there or not. Like we've shown that. We've seen that in our data. We're talking about raising our interest rates. Our economy is doing great. Again, we talked about 25 before. Now it's up to 50, which is a big, big move. Again, it's very, very important. Why? And how can we trade it over at Nadex? Again, Australia tends to follow suit a lot of times. So this Australian number tonight, this on Thursday, I like retail sales a lot. It's one of my top 3 kind of like news releases for every country that I'll follow, right? The fact that it's already pointed down minus 2.6, I think is, the way I feel about it, I feel like that is setting us up for a long opportunity in gold, or at least with the Aussie dollar, or even in the Aussie yen. You can trade both of them at Nadex. Reason why is because the more and more they make this a negative number, obviously there's some kind of overflow from countries in the region and countries in similar situations. But yeah, there were some lockdowns. Is it going to be like earth shattering? I mean, is it going to be like a positive 5%? No, but I feel like they're almost getting too negative, just kind of like how the preliminary GDP number is getting too positive. I feel like they're getting a little bit too negative. Now it could come in, ultra negative and even worse, right? Which only kind of helps the situation. But if you have weak dollar, weak Aussie, it's not going to move as much as weak dollar and strong Aussie news. And again, because it's not a popular trading time, 9:30 at night, tends to be some really great setups. So I'm really looking forward to that one this week. I think that's going to be a blockbuster trading opportunity. And then Friday is interesting because we have our core PCE price index. Now, again, you don't have to be an economy student or major, right? You don't have to be a macroeconomic major there to understand this one. Just understand that this is the core price index, right? This is basically the goods and service. You can see it purchased by consumers, excluding food and energy, where we know a lot of the inflation is right there. Still expected to be positive. Again, remember, supposedly this is all transitory inflation. This is not real. But again, positive on top of positive on top of positive on top of positive. As far as I understand, and again, this is what every definition I can find, transitory is like a wave, right? It comes in, but then it goes away. Well, if you just do positive, 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 that means the wave is eating up more of the beach. It's never going back. So again, haven't seen it yet. 10 o'clock, we have Powell speaking. Now, it's always convenient right? When you have an 8:30 price index release talking, and again, that's where all this political pressure is coming from, that, oh my God. And I'm sure you guys have seen the memes out there, the gas prices last year versus this year, the meat prices and the lumber prices and all these other things out there. Very interesting when he speaks an hour and a half after something like the price index, as well as that's where the consumer sentiment is. And the consumer sentiment is supposed to go a little bit higher, although it did have a big drop. And then day two of Jackson Hole. Now, day two of Jackson Hole provides more news releases, like news headlines, than day one. Day one is like the feeling out, like, okay, let's say you're going to be tough, not tough. This is what we're saying. What are we going to talk about? There can actually be things decided on day two. So Friday is one of those days that you either need to figure out how to get your, get your wins in and be protected, or make sure you are in limited risk scenarios. Again, i.e., using Nadex, right? Because again, one headline could really be a crazy catalyst and send this thing, sideways, down, up, left, right. I mean, it can go anyway, right? Again, things like, that global tax that were proposed, additional mandates, money being given to other people, helping with recovery, reduced tariff. I mean, there's so many different things out there. There's a lot of movement that can happen. Friday is typically when it happens. And then obviously on Saturday, we're not trading anymore, but that's day three. And you can see trust me, everybody knows if they want to get their face on the news, day two is the day that you're going to do it, right? So Friday is a very big day, and you need to be cautious with it. All right. All right. So let's go across and let's cover the indices. So you guys know, and again, I try to add as much education as I can in there. I obviously, I run a school. I try to give you guys everything I possibly can during these sessions. One of the things today that I want you guys to take from this is the time frame that you are doing your analysis on matters. Okay. Most of what we're talking about is kind of like an intraday based trading, a lot of Nadex, because you have all the daily expirations, all the shorter duration contracts. There are some things that you can do on a weekly basis, and obviously knockouts, they last 5 days, right? Till the end of the week on Friday. But for the most part, what we're talking about are things on a daily basis. Okay. I could look at hourly and 4-hour charts on the indices and look for more swing-based trades, but it doesn't really match up to what Nadex is providing. If you're going to look at indices, I recommend that you guys are looking at 15-minute charts. Okay. You still need to figure out what your trend is on a larger time frame. And again, you could use a 4-hour or maybe even like a 2-hour, and hour is a little bit shy, but if that's all you got, that's what you got to do. You can use like a 15-minute and an hourly. 15-minute, 2 hours, not bad. 15-minute, 4 hours, fine. But again, 4 hours hard because the market is, the indices are only really open for so long, and there's only so much movement in there. So be cautious with it. Right now, why this is difficult is I'm going to tell you there's not really any trend going on right now. We're basically going sideways. We're sitting back over here. This is where we were yesterday, right? The 23rd at this time, we're basically in the exact same spot. Yesterday morning, we talked about any type of basing, a pullback to the level down here at 44.76 and a push forward, and we were looking for 4,500. Yesterday morning, when I was doing the analysis, I was looking for us to hit 4,500 today. Okay. Reason why is because I expected Wednesday would be a very, very slow day. Being that it's only up 0.17 right now, this is kind of what I was worried about, that we were going to have tomorrow. It's just hitting us a day early. And again, a lot of that could be because we had so much movement from yesterday. But right now you can see we're kind of boxed in, and we have sellers coming in at 44.92. We have buyers, and again, this hit right around the 8:30, 9 o'clock window. We had talked about it earlier, the 44.76.75. And we had a decent push off the open. And again, it was on the 15-minute. That's why you're using those 15-minute charts. But right now it's kind of consolidating. You can see lower highs are coming in. We got a lower low. We got a red, green, red in candle formation. So right now it's kind of at lunchtime. I would say, there's no reason why it really needs to turn negative today. I haven't seen any news out there that is, saying that that's it. We're locking the U.S. down. We're laying everybody off again. I do have concerns that schools will become an issue, right? But on a weekly basis, that's not this week. That's probably in a few weeks from now. So as of right now, I think we're okay. I think anything that's positive out there as far as, Moderna gets all of a sudden approved from the FDA, they're not far behind either. They're, if they get full approval as well, any of these type of small news catalysts can potentially drive us forward. Anything that Powell says, anything about Jackson, Jackson comes from that. There's a lot in there, right? So although we're starting to see a little bit more of kind of a bearish, I think at this point it looks like we have sellers really trying to step in or I'm sorry, not sellers, buyers really step in around this 44.75-ish range. If we can continue to hold there, that may be the area where the buyers are positioning themselves for that push up to 4,500. And I do still think that we can hit 4,500 this week. I don't know, unless like we find out that there's a new variant that's twice as contagious as this last one, as Delta. I don't even know. But right now, there's no economic reasons why. We're getting infrastructure bills passed. We're getting things passed. We're all positive. Earnings seem to be good across the board. People are doing buybacks. So without any kind of official concrete news about tapering, which again, now they're talking about tapering slowing down a little bit, these are all positive things for the year. So again, finding an opportunity to go long, I think is good. I think watch your targets. If it does start to push higher, watch 4,500. I think that'll be an area where it bases. And again, every time we break through one of these channels, it tends to come back. You can see that, when we had down here, the 44.50, you can see right here, magically, it just happened to kind of go around 44.25. We had, where is it? 44.75 again, another area down here. So anytime we have any of these big round kind of numbers in there, 4,400, you can see that this was an area that it pulled back down to grab and go higher again. So, it's an area where it will suck in and then provide kind of sideways movement. But again, I do think there's a long in there. And again, I do think we hit 4,500 this week. Now, NQ is in the same scenario. Again, we were looking for a bounce. We were looking for the pullback. And again, we got the pullback back down at 15,300. You may say, what the heck does 15,300 have to do with 44? Well, it's the zeros behind it. Anytime you have those double zeros, whether it be 100, not even double, but like things like 10, things like 50, things like 100, right? Multiples of there's something called the quarters theory, but human beings tend to gravitate towards whole objects. So 0 and 1 or 0 and 100, big numbers. You can see that 15,300, again, that was an area that it broke through, pulled back, and then kind of got front right here. Same thing. It kind of came up and it kind of got up into that 75-ish range and then kind of halted right there. I'm okay with this. And, some people will look at this and say, wait a second, isn't that a selling opportunity? Yeah, it could be, right? You could have timed this one, and it's too late right now, obviously, but this is 10:30 in the morning, right? So we had an area of basing. We had a good push off of it, right? We came all the way down at 8:30, and again, here was the open. It came back and grabbed that area and then went higher. There's your opposing zone. Everybody knows that 10:30 is the common reversal time. There's your short in the NQ, pushing it back to the downside. I don't think it hit a 3-to-1 yet. Let me see. Really pretty close, probably. Right there. That's 3.12. So yes, your 1 to 3 risk to reward ratio was hit based off of a 10:30 reversal. So it's an area. I wouldn't be as worried about it though, because it did push about 3/4 of the way up to the top. So there's only a little bit of sellers left in there. I think if we can really maintain and hold this kind of down push right now, just like I said, 44.50, I think 15,400 is in the works today. And then again, look for a level of basing up top, and there'll be a bit of a pullback. But again, you can see that we're kind of stabilized. We're kind of forming that same channel. And again, it's in a 100-point range here, top and bottom, between 15,400 and 15,300. Okay. YM is just as choppy, right? And we had a couple levels in YM, and I talked about this earlier, that we had this one hit early. This is the European session open, and then you can see 6 o'clock, 9:15 right here. Actually, this was 8:45, and then it pulled back down at 9:30 for the open. This one even has less sideways movement, or less kind of upward movement on it. It's not as high. It's not breaking all-time high, so it's kind of boxed in. I would say in this one, although I am more positive on the ES and the NQ, the YM I am kind of more negative at this point, and here's why. Okay, inside of supply and demand, these things don't last forever. So if there's one, now they're stealing from down here. Oh, they're too small. There's one. There's two. So we have 1, 2, 3, and number 4. You guys know what number 4 means. Actually, I should probably use a different type of an X there. I don't think I have another one, but anyway, that tends to be where the break is going to occur on the last one. So again, lower highs, it keeps smashing into this zone. There's only so many buyers that can maintain this area. I'd say the second these things really start to roll, I think YM goes first today. So although I would give you a thumbs up on the other two, this one I'm going to have to give you a thumbs down and say, hey, I'm a little bit more bearish right now. it's got sellers up top. Every time it hits one of these small areas, they get turned around, and it got turned around again. And if I drew like a closer proximity zone and I drew it there, you can see that it was touched here and pretty much was those same sellers that forced it back to the downside. So it's kind of like one of those clouds that's got a lot of weight on top of it and it's starting to push it lower. So yeah, I'd say YM for me is more of a bearish type position right now. I'd be looking for short setups. Now, the Russell. The Russell, we had a level, and this was one we had talked about. This was actually a previously violated zone that we had some basing here. Again, some basing in, and there was the touch. I don't know if you guys can see it right here. See if I can make it bigger so you guys can see the candles. Level of basing. There was a gap there. It filled, hit that gap, and then shot back down again. That's exactly what we ran into this morning. Okay, there's your push right there. Now, this is, again, the open was right here, this kind of push up and down. There was a big push down and it didn't, and this occurred at 10 o'clock. 10:30 is right here. This one really turned around right at that 11 o'clock window. It's not as clean as what the NQ turnaround was, but it was very, very similar. And again, the way that this one looks, it had a very strong push up from the open, right, from that kind of 10 o'clock time frame. Pushed up, turned down, and is now starting to base. The buyers were unable to really kind of force this any higher. Now the question is, if we start to collapse back down again, is this one set for a trajectory to come back down and test that 2203? It's a level we've talked about. We know we have some sellers sitting right in here. I'm sorry, not sellers, buyers. Sorry, I keep messing those two up today. We have buyers sitting right here, right? Pushed up, pulled back, buyers stepped in. If they didn't, price would have continued to drop. That would be an overall target back to the downside. It's not a bad run, right? It's about 15 points to the downside. And I was calling for this one earlier, and we really just got the sideways movement. But I like how every time it starts to push down, it went here, and then went lower, and then went lower, and then boom, got a spike up. And then we went lower again, right? Lower, 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 which leads me to believe the next time this really gets some downward headway, again, we come down and we tag the 2203. So ESNQ, the first two, kind of giving you guys a thumbs up. I like those two, both longs. They are near big psychological numbers. And remember, they have clear air above. There's all-time highs. YM and Russell, not so much. Again, they have sellers above. We've seen those sellers. There's always going to be a pullback. And again, it is something that we see across multiple indices. Right now, I would say that Russell, it is listed as the strongest, up 0.44, but Russell also tends to be kind of twice what some of the other ones do. And I would say that it's a little bit over twice what the NQ is. It's about 4 times right now what the ES is, and the YM it's about 4.5 times. So if we start to roll again, this one will pick up the most steam, and that's just because it's the smaller indices. Tends to be what happens, right? Do you recommend using the 15-minute chart for my support and resistance or a higher time frame? For me, I always use the smaller ones to find my levels of buyers and sellers. I don't use support and resistance. It's too easy of a trap. Supply and demand is not the same as support and resistance, but I would use it on the lower time frames because that gives you a better look. I would use the upper time frame, the higher time frames to establish where trend is. And again, it's kind of like, I don't know, you can use like MapQuest, right? MapQuest or like Google, Waze or whatever you use tells you how to get somewhere, right? The larger time frames kind of tell you how to get there, but you're not going to find the potholes on that. Like we can't zoom in enough on Waze or like Google Maps to figure out where the potholes are. That's what you need the lower time frames for. So if you're going to be using it with Nadex, yeah, I would use, for all the indices, I would use 15-minute. Everything else you would use 30-minute to find kind of the potholes in your entries. And you can go a little bit lower. You can go, if it's around news time, you can actually drop it down to the 5 minutes to refine your risk a little bit, make it a little bit lower. But for the most part, again, if you've been doing this for a little while, you should be able to see those 5-minute candles on a 15. So hopefully that answered your question. All right, let's jump across currencies. So like I said, currencies have had a bunch of movement. So you can see we had a decent pop. This was at 9:30. This is the U.S. Open today. And it was kind of like, hey, let's lump on board, man. It's been weak dollar all night. Let's do it. Kind of that fear of missing out. And what happened is they got up and the 10:30 candle hit this level of sellers at 72.65, and then we've kind of pushed over and rolled back down again. So, we basically had the 10:30 push, the 10:45 stall, and then the 11 o'clock reversal is where this one rolled back to the downside. And again, go up to 30 minutes, a little bit clearer, and you can see it there. It's an area where we definitely had some sellers. It was actually, we could probably pull this up to there. That's where we had the bottom of this green candle. And again, that's where the confirmed touch was to there. We can put the same risk to reward ratio tool on it. And again, this setup is very similar to what we saw with the other one, right? 1 of 3 is right there, right? Very similar to the NQ trade. You always want to check charts at 9:30 in the morning. Why? US traders stepping online. Why is 10:30 also an important time? Because it is the most common reversal time. This one, in this case, hit an area where sellers had stepped in at 10:30 in the morning, right at the common reverse time, and immediately turned and rolled back to the downside. And it's about 2/3 to profit target at this point. It has moved, let's see. It's moved about 20 pips total in that one. And you may say, all right, well, 20 pips, Brian, is not that much, right? I mean, what could I, what are we really doing with, what am I going to do at 20 pips? Well, I would challenge you guys to go across, and we can look at it now. We can look at I can look at the 11 to 1. It's fine. I haven't refreshed. Mine is still up there. I guess that's not fair. You guys may not be able to see that. But if you're looking at your Nadex platform, right? If you're looking at your Nadex platform, if you go into binary options, go down to the Aussie dollar, you guys can see that there are 2-hour binary windows, okay? Why am I telling you looking at 2-hour binary windows? Well, I'm looking for short duration contracts because why? The strike prices are not that far away. So you may say, all right, this is only 20 pips, right? It just happened to be, it's 12:30 right now, right? Well, I know that, again, I know it from looking at it, but the strike differential in the 2-hour binaries and the Aussie dollar is only 4 pips. Knowing that it's only 4 pips, it moved 5 strike prices to the downside based off of this entry. Could you have taken advantage of a 5 strike price move? And again, technically this 11 to 1 hasn't expired yet. It's got 20 minutes, 28 minutes to go, right? 20, just under 20 minutes. It's already 5 strike prices worth of movement from that reversal time frame. Could you take advantage of that? Sure. Could you have used that same thing for the Harry Potter at the open today and done a 9 to 11? Because we did push up, we did base, it did pull down at the open and rally to the top side. Yes, we could have done the exact same thing. So while here's the short, whoops, there's the short, here is the long. Right there. You guys see it? There's your long trade. And again, same exact thing. The distance between these two is 25. So you're talking about almost 6 strikes prices to the downside that moved in that short time frame. That's how you use the shorter duration contract binaries to take advantage of both news as well as session and reversal times in the morning. So perfect setup, perfect example today of how you would have used it for that. Yeah, so if you've ever heard me, Robert, if you ever heard me talk about ATR, you know that I think ATR is the most underutilized indicator that exists. And it's not really an indicator. I'd say it's just more of like a gauge. It's more of a reading, right? There is a delay. And here's the problem with using that shorter duration. I like to use ATR on my larger time frames or time specific ATR, basically meaning a specific news release, retail sales in the United States, month over month number. What is the typical movement during that 1 30-minute candle? How I'll use ATR. As far as supply and demand goes, I don't really use ATR. I don't care about it. But I will typically say, okay, in a day, this is what's common, right? Or in a session, this is what's common. The problem is if I'm looking at it right now and I say, hey, listen, the ATR, this one, let's say at 8 o'clock in the morning, right? Oh my God, the ATR is only 7 pips. It's not going to move that far, right? That's not a fair really assessment because if you look back a little bit, I mean, we're in the middle of the night when there's nobody trading, right? So you really need to get more specific time. So the smaller time frame ATR is not as valid. You can use it saying, okay, listen, I know between 9 and 10, the average again is typically up in this range around the 8. So yes, you could say the average ATR in a 30-minute time frame for this position is 8.5. Okay, great. 8.5 times 4 means it could potentially move 32 pips inside of that 2-hour binary window. Well, here you go. This is 3 candles, right? Actually, let me take top to bottom. This is 9:30. There is 10:30. So in 1 hour, it moved 33.9. So do you see how I took the average ATR, multiplied it by 4, and then figured out what the potential was for a 2-hour binary in that window? That's how I use ATR for the small ones. Hopefully that helps. All right, Aussie yen. I feel like we're going to get a lot of questions on that one, Todd, if you're out there. It was very, very fast. I took 3 breaths when I explained that one. We're definitely going to get questions about that. I feel like there could be an entire presentation on short duration contracts. All right, so this Aussie yen is one we talked about earlier. I told you guys I had some concerns about it. It already had its 3 touches in there. It was kind of approaching higher. It did the same thing, the same reversal. And again, this is one of those times, was my analysis wrong? Nah, not really. I said I was scared about it. It was a level that people had stepped in. Typically 4 is where we look for it. But remember, at the end of the day, it hit at 10:30 in the morning for a reversal in that level, and it didn't mean that the buyers had enough oomph to kind of push through. The trade would have been down here at 9 o'clock when we pulled back at this lower time frame level. And again, the Aussie dollar, Aussie yen tend to move in the same direction, so it's not as hard to trade. You got to figure out which one is going to be best for you. There are short duration contracts on this one as well. Had you taken the 9 to 11, it moved 46 pips. If you guys go across and again look at that one, you can see that that one has a 5 pip spread, right? 5 pip different, but from the 9 to 11, it's right there. It's 50 pips. It moved what 10 strike prices in a 2-hour window as it pulled back into a small level. So had you taken an out of the money binary, maybe 2 or 3 away where there was $15 to $20 worth of risk, when this closed out for $100, was risking 20 to bank 100 at the end a good risk to reward ratio? Yeah, same trade. So right now, again, same assessment goes before. I probably would not take a short off of it. I know that it's hit now 4 separate times. Typically 4 is the magic number. Sometimes it's 5. Do I care that I missed an entry? I missed a short on this one? No, because I like the Aussie dollar one better. Remember, if you don't take a trade, you're not putting it. It's better to not trade than take too many trades and overtrade and make bad trades, if that makes sense. So again, this one, no harm, no foul, no trade in my eyes. And it did pull back, and it's always great when you're like, yep, look at that. Supply worked again. It's okay. I mean, I'm not, I'm here to help educate you guys. And again, if you didn't take this because it hit multiple times, good for you. That showed that you had patience and you were following your rules. Okay. Next sell for me on this one is up at the 80.23 level. Now, euro pound. Euro pound has been getting ugly. And the problem that I have with the euro pound right now is it's just not moving that much, right? It's just not moving. So I hate when this one disappears. And I'll do this, and now there's going to be 2. There's going to be one at the top and one at the bottom. But you can see right now the ATR is pretty low, right? If we go back to like the average kind of price here, we're talking about 5 pips worth of movement. So it's half, right? The daily ATR right now for this one, you can see that it's like flatlined, right? The current day, and again, daily ATR is fine because it's taking 14 days. It's 36 pips. So even with a short duration contract, there's just not that much I can do with the euro pound right now. So for me, I'm not really trading euro pound. I'm looking at the euro pound as a way to figure out who's winning the ever constant battle between the euro and the pound. Right now, nobody's winning. And again, a lot of this probably has to do with Jackson Hole later this week. But you can see right now on a 30-minute basis, I mean, here's where the market opened. 6 hours later, we're in the exact same spot. And that just happens to be the same spot we were yesterday morning at 8 a.m. And if we go back further, it's the same spot right here. We're just a little bit off from where we were on the 19th last week, right? Last Thursday, we're in the same spot. So yeah, I would say right now there's not a lot going on. They need some headlines. They need some catalysts. It's just not a good trading opportunity, so we're not going to spend too much time on it. Euro yen. So euro yen, I have 2 different trade setups on this one. As you can see, we've had price kind of bouncing back and forth. And it's holding pretty firm. Now, I'm looking for a break of 128.62. I don't have an entry. For those of you that watched, you know that our Harry Potter entry is when we break through, we base, and then we pull back. A quick spike down is not an entry for us, so it's still sitting there as a valid trade. I'm actually looking for it to come down and base in here, but I do love the fact that it pierced through. The fact that it pierced through is awesome. Why? Because that means there's no buyers here. That means that new buyers had to step in lower, which means there's a lot more likely chance that this is going to work out for me. So I like the 129.07 level. You can see that it's been front run twice. I like the fact that it's finally cleared this out. And again, you had your 1 touches, your 2 touches, and now we've had our 3, and we pierced through. Loving that one. So this is a decent runner. I think total on this one has about 27 to 30 pips to the downside on it. If it breaks through these sellers, again, there's an area a little bit lower. They would be coming in right around there. Let's change this to a dotted line. Let's throw a price on that one. Yeah, 128.25-ish level down there. So not a bad setup. And we're not talking about like 8 million pips here. It's only about 35. But again, there are shorter duration contracts. When we come through here again, it could be a European Open or it could be some big news on that one. But right now, again, very much sideways movement. Besides the buyers. But this is the 3 o'clock, this red candle right here. This is the 3 o'clock. This is the European Open. It sent it down. US session came back in. brought it right back up to where we were earlier. So all the losses in the European session literally did nothing but turn around and come right back up again. So yeah, not a whole lot of movement. Aussie, euro dollar, same thing. European session started right here. Here is the European Open, right there. And you can see the price right now, go to the right, exact same spot. This is where this gets fun. You can see that that was our drop down, right? And then you can see that if I pull this over here, it's the exact same. Isn't that funny? But copy it. You can see that that was the push down. Here is your baseline. Isn't that funny? European session down and up, US session up and down, and we're in the exact same spot. So is there a trend going on right now with the Aussie or the euro dollar? Nope. So again, not really anything for us to look at. 117.73 is a level up top I like. I really do. I do like this 1671 down here, or 1673 later in the week. But I would watch out for this level here. And again, if you're looking for short positions, again, taking this down to 117.07, I think is also a decent level. It was tested and it was a pretty nice bounce off of it. It was a prior level where you can see basing here, came up. It was a bottom, base, top, top. 3 touches, broke through. Harry Potter. Again, it's a big area of interest. So 117.07 to the downside. Okay. Pound yen. Again, kind of the same thing. Here's where we are at 12:30 right now. Let's see. The European Open was here. We had pushed up, we pushed back down, and then we just baseline again. So right here is where we were yesterday. We're in the same spot. Right now, currently in 24 hours, it's down 15 pips. This one has an ATR over 100. Is there any movement? Is there any trend right now? Is there great trading opportunity? Not really. I mean, there's a little bit on the smaller time frames. I mean, I guess if you caught the bottom here, there was about 50 pips in there from 9 till about 10:30. But then what happened at 10:30? It turned and reversed. And is it turning at great levels? Not really. They're okay. Like I said, I think this is more of a Jackson Hole scenario at this point. So, I mean, I guess you could draw this here. If you're looking for like a European session open, I guess you could do something off of that in that range. Okay. Pound yen. Sorry. Phone was going off and you have those like pre-programmed things on your phone. I'm like, can I call you back later? I needed to say like, I'll call you in 30 or I'll call you in 40. Pound dollar, same thing. We've had this area here and you can see that we had a base here. It wasn't the best. There was about 6 or 7 candles. That's why it's not highlighted the color. It was an area I wanted to watch out for. And since I put that on there, you can see we based in there, we pulled back in, we based again, we based all the way here for another 4 or 5 hours, came back in, based from 5:30 till about 10, we based in the same area and we're still stuck in the same area. So is there a trend right now in the pound dollar? No. If you know vertical or horizontal based strategies, basically meaning no movement based strategies, this has been a good one to play because it really hasn't moved much. Monday was a great day. We kind of reversed a lot of the weakness that we had, but right now it doesn't really have a trend. I like 137.86 up top, 136.11, but you can see we really have a lot of room on both directions to run. Actually, there was a small position you could have taken right there today. That's a European session move. It's about 3:30 and it retraced all the way back up. And again, this peak, I don't know if you guys can see it at the very, very bottom. Down here is where the time is. This peak here, right there, I'll turn it sideways. That peak right there, 10:30 in the morning. That's where the reversal came. So end of the day, not really channeling. All right, so here is the dollar CAD. Last week we were straight up, and again, this is when oil was basically evaporating, right? Oil prices went from what 70 all the way down to like 62 bucks. Then this week it was kind of the switch, right? We kind of turned over and we rolled all the way back down again. Earlier today, and again, if you guys are wondering what this yellow box is, I mentioned earlier today that some of the best opportunities in call spreads happen early in the week, especially when you have something like this that did kind of something uncharacteristic for 1 week. And again, it was oil based. This is what it's done thus far for oil. And we've almost gone through the bottom of the call spread at this point. This is a weekly call spread, right? This is the 128, I think it's the 28, 128, 28, something like that. Weekly call spread. So there was a gap on Sunday night. Price came up a little bit out of the money. And again, this is how it's collapsed all the way through. And again, it's directly been related with oil. We did mention earlier today that we had our 3 touches that we were watching out for, and we were watching for the next level. We had our 1, we had our 2, we had our 3. And look at that. Number 4 is what broke through. Now, it did miss entry. I'm not going to lie. I thought we were going to get a little bit lower at the 125.75 level, and it came down to 125.79. So I missed it by 4 cents before it rolled. I would say right now, oil will probably stabilize somewhere in here. There'll probably be some movement this afternoon, but right now we're really looking for trading opportunities for tomorrow. And funny enough, I drew this because this is when I told you the reversal would come in there. This doesn't really count, right? Again, it's the same body, but we do not have a green, red, green. I guess here, there could have been something made, but again, there's sellers right there, so would not have been interested in that one. I would say right now, levels to watch out for, the 125.75. That obviously matters. We have some sellers sitting right there. So again, that could be a level for tomorrow. I can remove all these because you guys already counted the 4. That one we don't need. I'm going to remove this bottom level because again, it got hit 3 times and broke through. I was looking to see if I could give you another clean one, but there's not a whole lot clean on the dollar CAD for that one. Yeah, I would say this, and again, this would be more of a currency-based move. It is going to be at the mercy of oil, unfortunately, but I think for oil inventory tomorrow, I would probably. I don't know that I would take this one. I guess if we're there for oil tomorrow, I would, because the dollar CAD is a proxy for oil, you typically want to look at that one first, and then when that one is reversing, that's where you want to look for this for kind of refined areas. Right now, and again, this is very, very easy to pull up top. This, not as hard because the dollar CAD is not going to drive oil. Oil will drive the dollar CAD. So I would like to find a long opportunity right now. Again, if you are inside of this call spread short, again, obviously be trailing your stop down. Don't, it's not worth risking all this profit to make just this little, you don't want to risk even to where it is right now. Here, I'll talk about that. That's how much you're going for right now. There's no point risking this much where current price is, right? No point risking that much for that little bit of profit. And again, when you were down here, you were risking, it was like this, right? This is where people hold on too long. And it's like, it had moved all the way down there. You should have been trailing the heck out of this thing, right? So right now, I would say, I think that this still has some more room to run to the downside. I don't see anything right now in oil until we get a headline, which would be the API number. Once that look and is confirmed for a switch, look for a position over here to switch because the CAD didn't have great data today. And I don't think tomorrow. Actually, you know what? Let me do it this way. Let's do none, CAD, all. They have some numbers on Friday, but they're not biggies. Yeah, I think dollar CAD's going to be at the mercy of oil. I think right now there's not enough Canadian news. There's a snap election, but with oil going up the way that it is, everything looks good right now for them. So not enough news right now to be able to trade just the dollar CAD. And if you're going to trade the dollar, there's better opportunity in other pairs right now. So yeah, I would say if I had to give you guys a red light, green light, I would say more bearish this position because I don't think oil is capped out yet. I want to see what the inventory numbers look like, especially if there's a big miss. Okay, dollar Swiss. Dollar Swiss is like, this is like watching paint dry right now. So it's an area of buyers, and again, it hit it and bounced and then kind of came up, and it is stuck. Hasn't been a Harry Potter trade, hasn't been a long trade, and it's literally stuck. So right now, not much we can do with the dollar Swiss. ATR on this one is shrinking down a lot too. If we go up to a daily, you can see that it's on the lower end of the spectrum. Get these spikes up here. Right now, the ATR it's 50. It's above the euro pound, but there's just not. I just don't see a lot of oomph. I mean, this is kind of boring. It just chopped back and forth and kind of consolidated in and then kind of dropped and popped and that's it. But I think 91.98 and 90.89 are the two levels. But this is just not really that exciting for me. I think there's better opportunity out there for you guys. So I would just say look elsewhere for the rest of this week. But if we can get a big spike either way, I think that wouldn't be bad. Here is the dollar yen. Here we'll continue these across. You can see this one got hit. And again, this is a 9 o'clock window. Whoops. Right at 9 o'clock. This is one of those ones that if you're waiting for the session open, You probably missed it. The session open happened one candle past, and again, that's why you kind of got to be ready to go. But the good thing about this one, and again, your 1 to 3 is right there. You can see how fast that 1 to 3 hit. Here, I'll drop it down to a lower time frame so you can see. There's your 1 to 3, and it hit it right at 9 o'clock. You were out at 9:30 at the opening candle. Just so you guys know, I pointed out earlier, that is a 28 pip move, and it's kind of where we're at right now. It's a 28 pip move in 15 minutes. Okay. You may say, why am I pointing that out? Well, I mentioned it earlier. If we go back to the short duration contracts, I can't obviously look at that time frame now, but you'll notice they have a 4 pip strike differential. Having a 4 pip strike differential, this one moved 7 strike prices from that 9 o'clock window, and really from the 9:20 window, really in about 10 minutes. So it goes back to where is your opportunity in markets right now that are not moving. Right, in 24 hours, 6 pips, -1, 8, 3, 5. Right, dollar CAD, we know that's oil. That's a little bit different. This is kind of gold, and again, 11. This is what you need to do. Drop down to short duration contracts, look for these 30-minute levels, and that's exactly what this one hit and moved. So right now, we've kind of pulled back up. The European session open was right here. We're kind of right where we are now. And again, if we go to where we were yesterday, we're in the exact same spot. So it's kind of like, how do you play these things? Find a level. Look, front run, great 9 o'clock open, short duration binary contract, 7 strike move in that one. You're out, you're done. Let this one kind of expire for that. Let this one go about its day, right? But even if you had let this one expire, the 9 to 11 is right here. A 9 to 11 contract, I guess really from the bottom. I mean, if you wanted to take it right at the 9 o'clock, but really from where it hit the zone to its close was 23, 23.5. Nadex is always a little bit higher. So yeah, six strike prices in 15 minutes, right? So yeah, that's dollar yen. All right, let's go across and let's look at gold, oil, because oil and gold is where we've been talking about. So this is kind of where we are. We were looking for a little bit of a reversal, and unfortunately, it kind of got down here, this 9:30. We were starting to pull back again, and yesterday we had up. For those of you that have been following, we've been talking about how we kind of have more or less kind of it's a 2-direction position. You'll see a lot of V's in here, up sometimes upside down, sometimes not, right? Typically, we get a 1-direction phase and then a retracement. Yesterday, right, we had an up and then we had an up. Today, we had an up into a zone, but unfortunately, it hit it at 6:30 and started to pull back down again. Right for the U.S. session, the U.S. trader couldn't stay away. They were like, oh my God, it's up again. Another 3%. And again, it's up 3.2% right now. It's just too tempting. And you can see that we kind of pulled back in time and we've rallied higher. So where we are right now, and again, I think, last week I said that I didn't think oil was justified to be as low as it was. We're kind of back where I think we need to be for oil. And again, this is an area where sellers have stepped in, the 62, 76, 62. It's kind of where we are right now, right? We've hit it at 11 o'clock. It reversed back down again. And again, impulse, really, if you want to take it, impulse correction, impulse correction, impulse correction, impulse. The question is, can we get through this level right now? It has been hit once. It has been hit twice. This is number 3. The next level comes in right above at 68.04, right? At 12 o'clock, typically we're not trying to plan movement. It's really starting to kind of slow down now. What I would do is I would look at this API release today. Again, if you don't know how to find it, you can go over to the DailyFX website and pull it. I just tend to pull it off of just type in API inventory report, and you'll end up getting the direct contract from the actual report. See what it says. Okay. It is not the one that moves the market tomorrow, but it does give us kind of a foreshadow of what it's going to be like. If it comes in as a surplus, kind of watch this one. In the overnight, this one could have some crazy movement. I would say right now, I mean, it being at 1 o'clock in the afternoon, I don't know that I'm in love with a short here. This wasn't a bad short. Had you taken it short from that level, it did hit that level. Let's see, how far did it go down? It's probably a 1 to 2. Let's see. Yeah, right there. So it was a 1 to 2.84. So it almost got that 1 to 3 risk to reward ratio in that time frame from 11 o'clock. Not a horrible trade. And again, some people for oil will take 1 to 2s. A 1 to 2 is right there. So you can see a 1 to 2, it far outweighed the pullback. All right. And that's just profit taking is all that was. Right now, I think I'd wait to the 6804. And again, if we can get up there for the API release, that could give us an option, or a way for it to kind of roll and push down. If we push up and start stabilizing, could also provide an opportunity in the European session to be able to take that one short. Let me see. The knockouts for this one are, whoops. Knockouts for oil, 68.25. We got a knockout sitting right there. So if you do like that 6804, there's a knockout up there. We got to make sure that it holds before the news release. So again, if we get a little bit of a help, that may be an interesting opportunity to be able to take something that's limited risk if that level is still holding tomorrow for news. Okay. So again, always nice when that works out. Gold is basically flat. And again, you can see how ugly gold is. There was a knockout bracket there. Basically, we talked about how these were all the knockout brackets are situated. The ceilings are situated in this area. This one most likely got stopped out, so the 1808 doesn't exist. You can see how 1800 is such a big psychological number. Finally, it broke through and then sucked back down again. And since that time, 1800 has been kind of the line in the sand. You expect that. It's a big psychological number. The media loves 1800. They start to talk about we are above 1800 again. 1800 is like like 35,000 was, right? For the YM, it took forever to get through 35,000. Then all of a sudden it was like, whew, 35,000, we're off to the races. It's like $50,000 is for Bitcoin, right? I don't know if you guys know this or not. Bitcoin, like, it's back down to 48,000, but the second it hits 50,000, everybody and their brother is like, look at that, Bitcoin's here to stay. It's real. Yeah, we're at 50,000 again. And it's the same thing. All the same people, all the same, the guys with the cymbals banging the cymbals, woo, 50,000, right? It's the same idea. 1800 is the same thing for gold. So it's a level or stabilize. I've said it before. I do think we have to try to find long opportunities right now for gold. I don't think that the inflationary picture is transitory. Obviously, the Fed uses a different dictionary than Webster's. When I've looked it up, it means that inflation is supposed to go away. And again, if we've had this rise of inflation up, it should go backwards. And I haven't seen a negative inflation number yet in a year. So yeah, I think gold deserves to go higher. You could use this level if you want. Is it the cleanest? Not really. It's an old level that we've talked about in the past. Maybe you look for a new level of risk in there. Just this is not a great level to form from. Let me see on the 15-minute. Can I give you a better one? It's okay. You could kind of use that level right there. Turn that one green if you're really looking for something. If I pull this one back a bit, I'll put it to there. You could have used that level, but I don't know. Until we get a true inflationary number. Now, when we talk about true inflationary numbers, we do have true inflationary numbers coming later this week. I actually don't need the yellows. I can just give you the dark ones. Right here. Friday morning, August 27th, core PCE. Again, this is the change in the price of goods and services purchased by consumers, excluding food and energy. Okay? Excluding food and energy. Okay? So this is a big one. This is a gauge of inflation. It's supposed to be 0.3. And it's kind of, you could say that, when you pick 0.6 every time, you could say, oh, look, it's going down. It's transitory. No, it's not transitory because it's positive. There's no negative, right? It just keeps getting higher, and the goods are getting higher, and the goods are getting higher, and the goods are getting higher. Now, it's not going as high as it was. It's not as accelerated, but it is still positive every month. So we'll see if we crack the 0.3. If it's a 0.4 or 0.5, again, we got to contact Webster's and tell them that their definition is wrong. Because that's supposedly because it's not 7 or because it's below that it's not transitory. But that's an inflationary number. Again, that number comes in high. Look for gold to continue to punch. And again, silver's up. We had a level here, and it chopped it and dropped and then hit it again and then dropped it again. So kind of more of an area of interest than anything, but we weren't looking to sell until that's the 23. And again, 24 is a big number. It got front run this morning. And again, very, very choppy. Let me bring it down to a 30-minute. You can see, there's this nothing in here. And the second it finally broke through, it gave us an entry this morning and kind of helped pop us. But again, 24 is a big psychological number. We're sitting high up here. Anything that they talk about, hey, the tapering's going to slow. Remember, gold is going to be a slower mover. Silver is always going to be a faster mover. The second we get any type of negative in this one will turn and kind of roll back down again. I would say profit targets, first profit targets in a shorts are 23.19-ish level. And again, big question is right now, are we not, if we get a little bit of a push up here and we get a confirm lower high, in, right? Right now it's kind of channeling down. If we can get an attempt up and it does not break above this 23.95, technical based sellers are going to be like, hey, look at that lower high. I got two, and they're going to draw a trend line, something like that, and be like, yep, channeling back to the downside. So look for that. Last but not least, and again, I'm going to go through this one pretty quick. Here's natural gas. Natural gas is down 1% today. And again, this one has been chopping back and forth. It did have a nice little level that we saw sellers in the past, and it did get front run here with a little bit of a gap. That level came in this morning and came in right around 7:30, so a little bit early. Right now, I would say watch that level, that $3.96.5. I would say watch the gap down here as well. Again, we got some room to run. We are 2 days in advance of both these levels. So again, it could be all the way down here by Thursday. But don't forget, the same oil inventory report that we have tomorrow, we do have natural gas, and that one will look like this. Just click US, and we'll look on Thursday right here. Natural gas inventories, 10:30 in the morning a.m. Expect to have less kind of a volume than we had last time by 40 million. Same way we trade oil, we trade natural gas. And again, this one has had lots of movement. It's at, again, minus 1% today. And again, you can see this one whips all over the place back and forth again with nice established levels. But we do have a couple of them out there. So watch, again, $3.96, 3.758. And again, if we're unable to crack this 3.84, these are all levels you could potentially take with a short duration contract before the natural gas inventory report. All right, so that is it for today. Like I said, went quick on that one. I can say it. Tuesday, August 31st is our next our next meeting for the kind of full breakdown of everything. If you have any questions today, you're more than welcome to email me. You can message Nadex as well. My email address is support@keeptradingsimple.com. You guys obviously know Nadex's their email address as well. Couldn't think of it. I must be out of coffee. All right, with that said, I am out of here today. Thank you guys so much for joining me. Make sure you guys catch us in the morning on YouTube. Search Nadex, hit the follow, and then click the bell notification so you guys know when we're going live. 8:45 to 9 a.m. every morning, we give you what's hot for the morning, and that name is changing, so you'll see a different title on it, and we have some fancy pictures. I guess the thumbnail or whatever will also be looking different. We're having some fun down there. So you guys take care, and I'll catch you guys next week.